Good afternoon and welcome to the first MTD for its question time, which we hope will be the first in a series of these events that are designed to help you, the owners and the managers of accounting firms, to understand the challenges that making tax digital will bring and to help develop strategies to hopefully thrive. My name is Andy North. I'm the Chief Marketing Officer here at TaxCalc, and I'm joined by my friend and colleague, Dean Shepherd, who's our Director of Compliance. Dean's an ex-accountant himself for 10 years, and he subsequently then joined to become a technologist, and he is our current resident expert on all things MTD. So we know that you'll have a lot of questions for Dean, and Dean is going to get stuck into, and we're going to help with a short presentation that we will launch with to bring everyone up to speed on the basics of what we expect MTD for it to look like. And then we're going to open up to the floor for live questions, which we think will probably take up the majority of the time that we have. Please use the Q&A box if you have any questions about MTD for it for Dean. You are welcome to use the chat function to chat among yourselves, but we won't be looking at that. And also post any questions you have about audio. If you're having any problems, then our colleagues can deal with those questions directly. A few frequently asked questions. Yes, we will be recording this. Yes, we will be sending you a copy at the end to everyone who is registered. And unfortunately, subtitles are not available on this live version, but if you do watch the YouTube version that will be coming out after this, then there is an automated subtitle box for those that inquired about subtitling. So before I ask Dean to begin his presentation, we would like to pose you a question to the audience so that we can get a quick read on really how you would assess your understanding of your obligations to comply based on what you know now. So
yep, that's live. We've got the poll up and running, and I think the answers or people answering the poll is starting to come in now, so we'll give that 30 seconds or so for people
give that time to take a look. Yes,
share their level of knowledge, and then we'll show everybody the results. You won't be called out individually, so we won't be showing a list of who the rookies are and who the borderline experts are, but I think it will help us gauge the level of knowledge of people on the webinar, so we can adjust how much detail we go into accordingly.
And we do have a sweepstake in the office on the outcome of this, but we won't be sharing the details of that.
Right, I think everybody that's going to vote has voted now, so I should be able to share those poll results on screen. So no borderline experts.
No borderline expert. I said 3%.
Oh yeah, so looks like we're not going to get some really tricky questions. Maybe just some tricky questions.
Yes, maybe some semi-tricky ones.
Okay, great. But otherwise, we've got a reasonable spread of rookies, people that have some knowledge, and we have some people on here that are reasonably competent and ready to get going with MTD for income tax already. So that's good. That's a good,
fantastic
split of people.
So without further ado, I'm going to hand over to you, Dean, for the font of wisdom that you are, to talk about the basics of MTD.
Fabulous. Okay, so here's some of the things that I'm going to be covering today. First of all, back to basics. I'm going to cover the basic premise of MTD for income tax. I think, judging by that first poll, that some of this stuff will be reasonably familiar to a lot of you, but I think it's worth going over those again. We're going to look at some key dates and deadlines. Obviously, that's very important to know when clients need to be doing things, when your practice needs to be doing things, and avoid any potential penalties. We're going to look at the impact on your clients, as well as the impact on your practice. And we're also going to see if there's any opportunities that might arise out of MTD for income tax. I think it's very easy to focus on the negative aspects. I think, you know, this all came about in 2015, and I think problems inherent with MTD generally, but in particular MTD for income tax have been well discussed. So we're going to try and end on the more positive aspects for your clients and your practice. I'll put questions and answers there at the end, but please do just fire any questions as they come to mind into the questions panel in GoToWebinar, and Andy will interject with those questions as we go along, because really the questions that you ask will dictate the content that we go through today. So I want to make sure that you get as much out of this session as possible, and we make it as interactive as possible. Okay, so if we kick off with back to basics. I'm going to start with digital record keeping, because really that's the fundamental basis behind making tax digital, is that your clients will have to keep their records in a digital format. And that is on a transactional basis. I know there's always some confusion about whether the underlying records themselves, invoices, receipts, bank statements, any kind of supporting documents have to be kept digitally. That's not the case. It's only the transactional record itself. What determines whether something's digital? Well, can it be viewed on a computer, really? So spreadsheets are absolutely fine, just as they are for MTD for VAT. It's fine to continue using spreadsheets for MTD for income tax. It is a digital form of record keeping. Gone will be the days of manually writing entries into physical cash books. But yes, as long as it's in a computerized format, that's fine, and it doesn't need to be the underlying documentation. Digital submissions. So this is the biggie, really. This is the one that's really going to affect you as accountants supporting your clients. It's having to submit summary information every quarter for those businesses that are caught within the MTD for income tax regime. So there are a number of new submission types that don't currently exist in today's self-assessment world. I would hope everybody on the call is aware of the requirement to submit quarterly. That's the big change that's coming in with MTD for income tax. That submission is just a summary submission. It's not the underlying transactional data itself. It's a summary of that information on a quarterly basis. And to give you an idea of what that information includes, just look at the supplementary pages of a tax return today. So if you look at those supplementary pages for self-employment or land and property, that's the level of information that needs to go in, basically a straightforward P&L. Digital tax return. So for those of you that remember the big announcement by George Osborne when MTD was first born, he announced that this was the abolishment of the tax return, and the tax return would no longer exist as we know it today. That's not really going to be the case. So the physical paper tax return that we have today won't exist. I'd imagine most people on this call will be using software to generate that today. That tax return, that PDF version of it, that won't exist either under MTD for income tax. But for all intents and purposes, all the information that you submit today on a client's tax return, that will still exist. It's just going to go into HMRC in a slightly different way using slightly different technology. But this is not by any stretch of the imagination going to be an abolishment of the digital tax return or the end of year tax return. We're still going to have a tax return largely as we know it today. Finally, it's important to understand who's in and who's out as far as MTD for income tax is concerned. So it applies to individuals and partnerships, so unincorporated businesses. So for now, you can ignore your LLPs, you can ignore your limited companies, you can ignore your charities, you can ignore partnerships with corporate partners, and a few other quirky things like pension schemes, overseas companies, that type of thing. But it's for unincorporated businesses, but that's trades and property businesses. So any landlords, they are deemed to have a property business. So they are caught just as self-employed people are for their trading business. I've put up there on the side, revenue greater than £10,000. So there is a threshold, a minimum threshold for when an individual or partnership falls within MTD, the income tax regime, and that's a turnover, not profit, turnover of £10,000. I believe we've got some questions.
We
in
do.
Advance on,
we had
on
some.
This section.
We had a deluge of questions initially that have been pre-submitted. So we'll just rattle through some of those. And the first one comes from Ken. who asks about this £10,000 threshold. On what basis do HMRC come to that £10,000? Why have they picked that?
Okay, so there's like a 2-year rule that applies to this £10,000 threshold. So you're always looking 2 years back from the tax year in question. So I'll come on to kind of key dates in a moment, but one of those key dates is the commencement for MTD for income tax, April 23. So for that tax year, in order to determine whether your client qualifies or exceeds that 10,000 threshold for that tax year, you've got to look back 2 tax years prior.
Right.
If 2 tax years prior, the revenue is below 10,000, then you are fine for another year. If it's a new business, so 2 years prior, if it wasn't trading, then that's treated as 0 turnover for MTD purposes. So you're always looking back 2 years prior.
2 years.
And it's the sum of all relevant income types. So it's if you're self-employed and you've got property income, then you look at the joint income from both.
Right.
When looking at the 10,000 threshold, not individually. So if you had self-employment and a property business that were both below £10,000 but added together they're above, then that individual falls within
still has to be
MTD. Yeah.
Right. Okay. Second question from Darren, who is worried about the non-VAT registered clients, and he's asking if estimates can be just submitted on previous year's figures and then just corrected when the final submission is made. What about that?
The short answer is no. For anybody on the webinar that has been involved with MTD for VAT, you will have heard the term digital links. There needs to be a link between the underlying data, if you like, and the summary that goes in to HMRC. So it's not going to be possible to just submit for estimated.
So you just can't
quarters.
input the figures, it has to be backed up.
That's right, it's got to be backed up by the underlying transactions. I mean, if you were to go ahead and just submit 4 quarters on that basis, and when you did your final tax return submission, if the figures were wildly different, then potentially HMRC are going to start asking questions. They're going to want to see the underlying data that supported those quarterly submissions to understand why the end of year is so different. And then I think you'd be in a bit of a sticky wicket if you'd been submitting estimated data with no link at all to the underlying transactions.
I've heard quite a few people suggesting that they're going to throw in random figures and just tidy it up at the end. So
it's a risk.
No.
It's a risk. It's not a risk I would take in my practice.
Fine. Okay, so another question here from Linda, who says that most of her clients are the type that turn up with carrier bags full of receipts, and then she just uses a spreadsheet or some simple accounting packages to produce the accounts. She's asking whether under MTD she'll be able to just continue, or really will she have to use a digital software to upload those figures?
Yeah, there'll be options. So she's certainly going to have to change the way that she supports her client at the moment. So if you have clients that are turning up once a year with a bag full of receipts, then that's just not going to cut it under MTD, because you have to make quarterly submissions. Now, there's no problem with them still turning up with a bag full of receipts, as long as that is once every quarter rather than once every year. And then if you're providing the service to your client of taking those receipts, putting them into a digital record keeping system that can be a spreadsheet, you can carry on using the same spreadsheet that she's using today, or you may choose to use a bookkeeping application. There's different options for what you can do, but the big thing that will change is that bag full of receipts will have to be dealt with quarterly rather than annually.
Right. So that's the key change. And then Linda also asks about adjustments that are made at the end of the year. Can they be accounted for under MTD, such as accruals, capital allowances?
Yeah. Again, you've got a bit of choice there. So you could account for those quarterly if you wanted to. So if you've got clients today that you're perhaps already doing either monthly bookkeeping for or quarterly management reports, where you're already making those kind of adjustments on a monthly or quarterly basis, then yes, those can be reflected in the quarterly submissions to HMRC, which will obviously make them a bit more accurate than if you don't do them, but there's no obligation to. So those types of adjustments can wait to the year end, as long as you're submitting a summary of the transactions that have happened in the quarter. That's absolutely fine. You can stop there. You don't need to go and do those end of year adjustments if you like.
Right, so they can still be maintained. Fantastic, excellent. We move to the next section.
Right. So key dates and deadlines. We mentioned a few in answering those questions, but a really important one I think is April 23. This is when it really kicks off. This is the mandation date for MTD for income tax. Now, as things stand, it's all based on the accounting period of the business, which for rental businesses is automatically 5th of April 23. But for, or say 5th of April, but for trading businesses, you've got a lot more flexibility at the moment in terms of what year end you can use for that individual or partnership. Now, as the draft legislation is stated, it's for accounting periods commencing on or after 6th of April 2023. So that brings in all your 5th of April year ends straight away. It doesn't necessarily bring in your other year ends. Other year ends could potentially be pushed back a year. Now, the slight caveat with that is if you are aware of the basis period reform proposals that are currently being bandied about. There's an open consultation at the moment. I'd encourage you to go to taxcalc.com, have a look at the blog that we wrote on basis period reform, because I'm not a big fan of the proposals, and the consultation is open until the end of this month, so it's well worth a look there. Now, if those proposals find their way into legislation, which is currently what's looking likely, then it almost deems every business, whether it's a trade or property, to effectively have a 5th of April year end for tax purposes, which means every single trading and business client you have with turnover above £10,000, they are going to be in at the same time straight away with effect from 6th of April 23. And that's one of the reasons I don't really support that change, because there's no staggering. You know, under VAT, we have people on different staggers, which means you can somewhat spread the workload of VAT out every month. If this basis period reform finds its way into the legislation, then there will be no staggering as far as MTD for income tax is concerned. Everybody's going to go in from the start, and everybody will have the same quarter ends to report to, which could be quite problematic. 31st of January, 31st of July, I'm sure those dates are very familiar with everybody. They're not really going to change. So as much as a lot of commentators think this quarterly reporting is a preempting quarterly paying, right now there is no active proposal for any change to the payment on account system that we've got today. So payments on account will continue on 31st of January, 31st of July, and also the final deadline for the end of year tax return remains the same, 31st of January. So you do have these 4 quarterly submissions throughout the year, but the end of year tax return, which is for all other income that forms part of the tax return, plus the final adjusted accounts figures, the submission deadline for that is going to remain as 31st of January. I've put 21-22 tax year up on the screen as an important date. You might remember I mentioned earlier that you're looking back 2 years to see whether you've reached this 10,000 turnover threshold. Well, if your accounting period is 6th of April 23 to 5th of April 24, that first year of being mandated for MTD for income tax, then it is the current tax year that we're in, 21-22, that will be the relevant year for that turnover threshold.
Right.
So when you're doing the accounts, or if you're monitoring the income of your clients for the current tax year, this is the one that's relevant for the 10,000 threshold. Finally, key date deadline, 1 month. That's how long you've got to make a quarterly submission. So let's say you are a 5th of April year end. Your first quarter from 6th of April 23 will be from 6th of April 23 to April, May, June, 5th of July 23, and then you'll have 1 month in which to file that quarterly submission.
Right.
So 5th of August will be the first mandatory deadline under MTD for income tax.
Okay, and that is a simplified filing. That's not.
Yep, that's just the quarterly submission, no end of year adjustments, but that will be the first deadline that your clients will hit.
Fantastic. Okay, so let's get into some more of the questions that we've had sent in. Will HMRC accept manual entry for annual summary data? If not, how do we maintain digital records for the same?
Okay, so yes is the answer. So for the quarterly submissions, you need to maintain a digital link to the underlying transactions when they are submitted through to HMRC. I think what we're talking about here is the end of year accounts effectively. That annual submission, you don't have to have the same digital link whatsoever.
Right.
So your existing process for preparing the accounts can be the same as it is today. You submit your 4 quarters during the year, but you come to do your end of year accounts, you get to those final figures, work out your capital allowances, your tax adjustments, that kind of thing, and then you can manually enter those into appropriate software as you do today. It don't have to have a digital link to the accounts or a link from the accounts to the bookkeeping. That doesn't come into play at all.
Right. Okay. Question about penalties. What will the penalties be? Any notions?
It's not set in stone yet, but where we are heading is a points-based system for penalties. So today we've got, I think everyone knows the £100 penalty if you miss that 31st of January filing. There isn't going to be a £100 penalty every time you miss a quarterly submission, if you do indeed miss a quarterly submission, but there will be an accumulation of points. And once you hit a certain number of points, then it's at that point at which you can receive a penalty.
Right, like a driving license.
Yes.
Rather like a driving license. Yes. And Deborah also asked, can errors be corrected in the next return as they can with VAT?
So again, this is something that I'm not entirely comfortable with how HMRC are proposing the solution at the moment. So what HMRC is suggesting is that, or at least what they're anticipating, is if there are changes to the information for a quarter that you've already submitted, then you should go back and resubmit that original quarter, which is very different to what we have with VAT. Unless we're talking about a really big VAT error, if you have some new transactions come in that you didn't notice at the time, or if there was an error that you identified, you just adjust it on the next VAT return. There doesn't seem to be any provision for that as far as income tax is concerned.
Right.
So it could be that every quarter, as well as submitting that quarter's information, if new transactions have come to light in a previous quarter or quarters, you could end up having to resubmit those under the existing proposals from HMRC. When I speak to accountants, they don't want to do that.
Right.
So I think most people, unless HMRC really raise it as something that's not acceptable, I think most people, once they've submitted a quarter, they're done and dusted. If there's new transactions that come to light, they'll deal with it on the end of year accounts rather than resubmit things. But you shouldn't put older transactions into a current quarter's submission.
Okay, right. Okay, and one more question just on this subject. How often will returns and declarations be sent to HMRC? If quarterly, how long after the year end will the declaration be due? And is there any indication of the amount of detail that will be expected in those returns?
Okay. What we don't really have an understanding of is what standard of bookkeeping requirement is expected from HMRC's end. So the quarterly submissions, we call those the obligation period, okay? So that's the period at which you must submit information to HMRC. You cannot have a period that's longer than a quarter, or a 3-month period. You can submit as many times as you like within that 3-month obligation period. I've not yet met a single accountant that wants to submit more often, but if you chose to, then you could submit daily, weekly, monthly, as often as you like. but it's that 3-month obligation period that's relevant as far as filing deadlines are concerned, and it's a 1-month filing deadline for that. For the end of year, it's exactly the same deadlines as we have under self-assessment today. So it's 31st of January following the tax year that you've got before you have to file that end of year submission. And there's 2 types of end of year submission. There's the end of period statement, which is effectively your final accounts. So the supplementary pages, the tax return that we have today for self-employment and property, they're going to be replaced with an end of period statement, and those have to be submitted prior to the end of year return, sometimes referred to as the crystallization. It's your final tax return as we have it today.
Final end. Okay. Conscious of time, we're already 25 minutes into the session. We've got a lot to cover, so let's pile through to the next option.
So impact on your clients. We've covered the digital record keeping piece. That is certainly going to be the biggest impact on clients. Real-time information, we've kind of alluded to that it's not going to be good enough to do things on an annual basis anymore. If you are working with clients that you only see once a year, then you are going to have to see them more often. As far as HMRC are concerned, the record keeping should be as close to real time as possible. That's what they say. But I think realistically, as long as it's up to date so that you can file those quarterly submissions, then that's as close to real time as you have to be to avoid any penalty. Quarterly updates, yeah, that's the key change. We've certainly covered that up to this point. And also choice of financial year end, and this kind of comes back to that basis period reform that I mentioned earlier. I know lots of tax commentators have been saying that you could change your year end from 5th of April to 31st of March if you're a sole trader, which could buy you an extra year before going into MTD for income tax. But if these basis period reform proposals go through into legislation, as is looking quite likely at the moment, then that will make no difference. Everybody will be in regardless of the financial year end.
Fine. Okay. This is going to be fun. So a few questions. One here is interesting, that I have a client who has 20 rental properties plus partnership income plus self-employed income. I do not prepare all of the accounts, but do I have to submit each partnership MTD plus personal MTD?
Okay. Someone certainly has to. The obligation is with your client to make sure those submissions go in, even if you act for that client. If we look at those different streams of income that this person has, so they've got a client with 20
rental properties. Yes.
Okay. So if they are all those properties are ordinary UK properties, then the income and expenses from those will be amalgamated when you make the quarterly submission. So you won't make 20 separate quarterly submissions. You will have to amalgamate these figures and make a single.
So that counts as a business.
Yeah, unless it's a different type of property. So if any of those are furnished holiday lets, then all the furnished holiday lets are amalgamated together. If any of those properties are foreign properties, then all of those are amalgamated together. So you could potentially have 3 or 4 different quarterly property businesses, but if they are all of the same type, then they are amalgamated together.
Okay.
And yes, there will be separate submissions for the partnership and for the self-employment. So at least 3, lots of quarterly submissions for this one client, potentially more depending on the makeup of that property portfolio.
Okay, I hope that answers your question. Malcolm asks that will you, and I presume he means you, be producing standard letters that can be sent to clients affected by MTD, outlining what is required. So will TaxCalc be developing tools?
Yeah, I mean we're assessing everything that we can do to assist accountants with supporting their clients through this at the moment. We have a number of key products coming out very shortly that will help both in terms of all the filing requirements that need to be met, but also options for communicating with clients a little more easily than perhaps they do at the moment. And within that, we'll certainly have standard letters, emails, communication that can be used with clients. But if anybody really wants to work with us on the makeup of that and what that could look like, then by all means do get in touch, because that is something that's live that we're working on right now.
Absolutely. Are we predicting that they're going to do a soft landing for this, or is it a hard stop?
That's a very good question. It depends what we mean by soft landing period. So if we think of VAT, what we had with soft landing period, we had a soft landing period in relation to digital links. They weren't immediately enforced. There was a soft touch approach, I would say, to penalties. Nothing has been said officially by HMRC. I think the party line for HMRC at the moment is that there will be no soft landing period of any kind, because they've had that soft landing period for VAT. My gut instinct is the closer we get to April 23, then I think they'll be a bit more pragmatic and have some things. Probably, I mean, I can't imagine they won't have a soft touch approach to quarterly submission deadlines. I think there will be perhaps a delay to that points system. The digital links aspect, they may not repeat the soft landing period, because they have had that for VAT, and it is now more widely understood by both unrepresented taxpayers and accountants. But certainly, as things stand, nothing formally confirmed.
Nothing confirmed, but maybe there'll be a
I'm keeping my fingers crossed that we'll have some kind of lighter touch. Yeah.
Here is hoping. So we have a question here now. This is coming up a lot. Do I need to register again? I've already registered for an agent under VAT. What about, will I have to do so again?
As an agent, no. If you're already registered, you have your agent services account, you're already acting for clients within VAT, then no, you don't need to do anything else as an agent. Your clients, however, will need to come onto the MTD for income tax regime, just as they had to do for VAT. Now, they can either do that themselves, or you can do that for them. It was quite a rigmarole with VAT, because you had to do every single client one by one. Every single client had to be authorized with an email. Not every client has an individual email. I certainly acted for a number of clients, particularly in the farming sector, where they have a single email for the whole family to use for kind of tax purposes. So there were lots of problems on the VAT side that HMRC are saying they're going to iron out for income tax and make it easier to go through that process. So there will be a process to go through for the individual clients, but if you've already got an agent services account as an agent, then that's fine. You don't need to do anything else from an agent perspective.
Excellent. Okay, one more question, if I may, because these are really good. So just going back to the landlord's question, does the planned rollout of MTD for it to include non-resident landlords? So what happens there?
It does, yes. So if let's say your client is non-resident, but they've got UK property that they're declaring on a UK tax return, then yes, they will be within MTD for income tax if they exceed the £10,000.
Okay, threshold. So they're covered as well. Okay, conscious of time.
Okay, let's go on to the next section, impact on the practice. Okay, so educating your team. Don't need to elaborate too much on here, because obviously everybody on this webinar is educating themselves, and if they have teams, perhaps they're on the webinar as well, but if not, then that information can be disseminated. But certainly it will be important for everybody within your team that is client facing to have a good understanding, a good basic understanding of what MTD for income tax is about, certainly from the client's perspective, because there will be a point at which HMRC start rolling out all the TV adverts, radio adverts, start sending letters out to individuals that they think are likely to be brought within MTD for income tax from the outset. And it's important when your clients hear that information that it's not completely new to them, that they know that you're on top of the ball and you've already made them aware of it. But in order to do that, your team need to be aware of it, because they're the ones that are going to be answering the questions that come in. So educating the team is really important, as is educating your clients. Obviously, your clients don't need to know the extent of detail that your team perhaps need to, but they certainly need to know the important points. The fact that the records are going to have to be kept digitally if they're not already, and that they are going to have to be kept up to date quarterly if they're not already. Segmenting your client base. So this is something I'm a big fan of. In my practice, I used a CRM tool for a whole variety of different reasons to be able to segment my clients into different categories. We've got tools within TaxCalc Suite that you can use to segment your client base, but it's really identifying which of your clients are at greatest risk of not being able to comply with MTD for income tax when it comes live in April 23. The standout one for me are property landlords that you perhaps only see once a year, that probably don't keep records of any kind at the moment. I certainly had a large number of property landlords in my client base that would just email me once a year saying tenants are the same, rent's the same, expenses the same, except we had the boiler repaired at £400, something like that. That's just not going to cut it for MTD for income tax. So I would say identify your highest risk clients and start approaching them first. Certainly any client that isn't keeping digital records at the moment, something is going to have to change. So whether that is introducing your client to a digital bookkeeping system, and that could be spreadsheets, or you offering a bookkeeping service to those clients, and then you keep it in a digital format. Whatever route you go down, something needs to change, and you want to make sure that you start working on those clients first. The other thing is that you're going to have clients that are already MTD ready. They're already going to be using digital bookkeeping systems. They're already working with you monthly or quarterly. Perhaps you're already doing management reports for them. For them, MTD for income tax should just be a click of the button.
Yeah. So you've got to pick which ones are going to need the most attention. Maybe run a webinar, much like this, for them.
Why not?
Okay, fantastic. Right.
Final one, yes, managing deadlines. I mean, that's going to be super important. Big impact on your practice is going to be managing all these deadlines. Again, coming back to this basis period reform issue, if that doesn't go ahead, so if enough people, and you know we've got some 500 people on this call, if everybody responds to that basis period reform consultation saying what a terrible idea it is, then maybe it wouldn't go through. In which case deadlines could be spread, just like they are for VAT. You'll have a lot in the VAT1 stagger, but you'll have enough in the other staggers that it spreads the workload a little bit. If that reform goes through and every single self-employed client, every single property client is all on effectively a VAT1 income tax stagger, then you're going to have to manage those deadlines and the workload within your practice to be able to file that information every 3 months. It's going to impact a lot of practices. I think we're going to find that difficult.
Yeah, I think you're right. So we are moving through. Do you want to, before I've got a whole pile of questions here. Do you want to move on to? Are we on? So
we wanted to run a poll, didn't we, before we look at opportunities?
We did.
Second poll. Okay.
So the question here is based on what you've heard so far. So Dean has vented forth and hopefully given you what you need. But based on what you know right now, how do you feel about MTD? Are you anxious, concerned, indifferent? Where are we looking?
Positive. Are you anxious, concerned, indifferent?
I'm generally anxious, I'd say.
Just generally an anxious person.
Not, yeah. MTD or not. So the lion's share appear to be that most people are slightly anxious and concerned.
Yeah, we'll let that still people answering. Let that run a few more seconds and then share those results. Okay, we have a bit of a tie there, I think. So we've got 35% feeling quite anxious. I think they really struggle to cope when MTD for income tax comes in. 35% concerned. There's no benefit to the clients or the practice. 18% indifferent. Just another curveball from HMRC. And we do have some positives in there. 12%. That's not bad. I not sure I would have expected 12%.
That's high for me, and we haven't gone through the positive side of MTD yet. So
yeah, but yeah, anxious and concerned. I think I would be in the concerned category, particularly since this basis period reform is likely to come in. So let's move those poll results and look at the opportunities. Okay, so what are the opportunities with MTD for income tax, or what might they bring? Better record keeping. I think if I look at the profile of clients in my previous practice, I think there was certainly a good proportion of clients that had terrible record keeping. And if I could have persuaded them to use a digital bookkeeping package, or even just get them onto a spreadsheet, then that would have made my life easier. I think there were clients, if I'd got them to keep their record keeping quarterly rather than just provide me with this big annual mess in January with limited time to sort it out, then that again would have made my life easier. So I think there is an opportunity to use MTD for income tax as a bit of a stick with clients to really help them improve their record keeping. Stronger client relationships. Speaking with a number of accountants and how they've been working with clients over the past 18 months, I think they've generally been successful at communicating with their clients digitally and using various tools, Teams, Zoom, whatever it might be. But one thing that they've missed is perhaps the regular kind of contact that comes with dropping things at the office, picking up records, coming in to sign things off. Each of those touch points and interactions that you have with clients can help build that relationship. And I think really it's that strong working relationship you have with your clients that keeps them as being clients. And that's really, I think that's something that clients really value in an accountant that probably isn't expressed enough. It's not just they want a tax return and accounts, VAT returns doing. It is that relationship that they're in safe hands, and any touch point that you have with clients helps to improve that. And if you've got clients that you currently only see once a year, well, MTD is going to give you at least 4 times a year on top of that you're going to be working with those clients.
Are we likely to see more accountants getting Christmas cards from their clients, do you think?
I suspect they will get Christmas cards, Easter cards, summer cards.
There's going to be a lot of love coming their way.
5 million new clients, potentially, Andy, coming onto the market. So you may well have heard that HMRC have no plans to produce their own website service like they do today to help unrepresented taxpayers file their tax returns. So you or I, Andy, could go onto HMRC's website, register with the Government Gateway account, and complete a tax return on HMRC's website without using an accountant or using other third-party software. That is an option today. HMRC have said that is not going to be an option when MTD for income tax comes into effect. So today, about 5 million individuals file their tax return through HMRC's website, and they're going to need an alternative solution. And I think given the complexity of MTD for income tax, I think a large proportion of those will be looking for an accountant to support them.
I know there's a lot of questions about charging structures and fee structures, which I think we're probably going to be doing a session on in the coming weeks.
Yeah. More fees. So my practice was predominantly compliance based, and I'm perfectly happy with that decision that I made for it to be predominantly compliance based. Now, as much as conversations can be difficult with clients when you're wanting to put up fees for whatever reason, maybe it is they're just taking up more time, or their case was more complex than perhaps first thought. Whatever the reason for putting up fees for clients, it's never a particularly comfortable conversation. But it's going to be unavoidable for MTD for income tax. And I think the way I try and frame it with accountants is that, if you had a client that today is a sole trader, trades below the VAT threshold, and you have a set fee for them, and you see them once a year. Once they go over the VAT threshold, then the relationship changes. They're going to need more services from you, unless they're going to do everything themselves, which isn't, some will, but it's not that likely. You're going to have to start working with them quarterly. You're going to have to start making these VAT returns with a 1 month turnaround. And I don't know of any accountant that will have a problem charging for those additional VAT services.
And it will become more obvious to the client of what more you are doing.
Yeah. So. And I see exactly the same thing happening for MTD for income tax. It's going to be difficult for a lot of clients because some of them are struggling, and to pay extra fees to an accountant for whatever reason, it's going to be difficult. But there's no doubt they're going to need that support, and accountants should have no issue with charging appropriately for it.
Absolutely, it's a thorny issue. So we are now into the question and answer session.
Yes, we are.
We have 15 minutes formally. I may say now that there is a chance we will go over, and we will continue while people continue to want to stay and watch, because there's a lot to get through. So let's get into a few more of these questions. Question in from Maurice is one of the pre-submitted questions. We act for landlords, and we have 1 month to collect data from letting agents, input data for either 3 months or just the most recent month, and file around 400 MTD returns. We're aware of others with over 1,000 to file. What bulk filing facility is TaxCalc going to be able to provide?
That's a very good question. So when I try and think about what software solutions our customers are going to need, kind of break it down into the 2 key elements of the MTD for income tax process. So there's a completely new stuff, the quarterly submission side of things. Absolutely, we want to bring out a solution that supports all our customers with the quarterly submissions, and for the astute amongst you will have noticed when you log into TaxCalc in the launcher, we've now got Business Filer there, where you can click on the button and find out a bit more information. So that's going to be launching later this year, and that will support the quarterly submission side of things. The end of year routine, which is the new digital tax return, if you like, as you'd expect, that all the functionality there will be within tax return production. And we want to try and ensure that the how you use the solution today isn't going to change hugely when MTD for income tax comes in, but the end of year stuff will reside in tax return production, and we'll be releasing that next year to support people wanting to join HMRC's pilot in advance of mandation in April 23. When it comes specifically to the bulk filing aspect, then please do get in touch with us, because this is live software that we're building right now and is soon going to be there for release. We want to find people who are going to look at the software, use it, try it out, get people into the HMRC pilot, and then you can give us the feedback on what options you would need to help support bulk filing, like those 400 or potentially 1,000 businesses needing to file to the same deadline every 3 months. So yeah, we'd love to work with you on that one.
Yeah, please do email us if you're willing to help out. So Amanda says, I've expressed interest in the pilot scheme. When will this be available?
Yes, we haven't talked much about the pilot. So officially the HMRC pilot is open now. It has been open for some years. Personally, I wouldn't recommend putting a client into the pilot today, putting a client into the pilot today. Personally, I would probably wait for April 23, because that still gives you a year in advance of mandation. It also means that you're putting your client in for the 22-23 tax year, as opposed to the 21-22, which is kind of 2 years prior to mandation, particularly as HMRC do have a habit of changing the goalposts a little bit, and we'll build our software to their specification. We think we're good to go, and I know I keep bringing up basis period reform, but they'll throw in a curveball like basis period reform, and then we have to rethink our solution a little bit to see if it still fits what HMRC are proposing. So hang tight. If anybody wants to join the HMRC pilot, then please do contact us. We definitely want to get you involved, and we want people to try it out and see how things work. But yes, watch this space on that one.
So, question here from Stuart. He says, is it acceptable to just enter digitally the supplier total from a statement rather than individual invoices?
Oh, that's a good question. I would suggest not. Yeah, I think you need to individually be recording invoices in whichever bookkeeping system that you're using for that particular client, whether it is spreadsheets or something a bit more formal. I don't think it'd be acceptable to use a summary statement in total.
No? Okay. And Stuart also asked, if you are self-employed and employee, does the employed salary figure get added so if you've got an income?
No.
No.
So for the 10,000 threshold, it's only self-employment income or your property income. Any other sources of income can be ignored as far as that 10,000 threshold is concerned. Okay,
so Richard's question about whether that includes pensions as well.
No, that's all excluded. Although I would say once you're in MTD, you are in it for all your income sources, but you only have to report quarterly your business income, your trade or your property. Everything else that goes on the tax return is still technically under MTD, but it goes on the end of year return and doesn't factor into the 10,000 threshold.
Right, so you haven't got to do the quarterlies for those. Naomi says, can you confirm if we will have different quarters like VAT for income tax, or will everyone have the same period for submitting figures?
You're going to make me bring up basis period reform again, aren't you?
I am, yes.
As things stand, if basis period reform doesn't come in, then it's relevant to the accounting period. So if you've got a 31st of August year end, then you are going to be on a different stagger to if you've got a 31st of March year end. However, if this basis period reform goes through, then everybody will effectively be reporting to the same quarters as if they've got a 5th of April year end.
So yeah, the basis period reform is still under review, although it is written into legislation. So
yeah, I mean the consultation is open, but everything or history kind of tells us that once we're at consultation stage, things don't often change that much before they hit the legislation.
So we can only guess. Okay, so Claudia was just asking for some clarity on the 2-year turnover rule. Is it in both years, or that you need to be over that 10,000, or is it just the 1 year, 2 years prior?
It's just the 1 year, 2 years prior, right, which will throw up some issues.
So you may have gone down.
So you may, in 21-22, you may have a very good year, which means you are absolutely in for 23-24, even if the intervening year is a poor one, and even if 23-24 is a poor one. You're always looking back 2 years. So once you've exceeded it, you're going to be in for at least a year, and then the next year will dictate whether you can.
So you can drop back out again, right?
Yeah.
Do you have to include? No, we've answered that question. That's about interest and dividends. That's a no. Can you still use accruals for rental income, or do you need to change to a cash basis?
There is no change to the existing rules on whether you use cash or accruals basis. So that's both the same for trades and for property. There's slightly different rules for both, but those rules will continue under MTD for income tax. So you do have the choice.
You have the choice, right? Yeah. Okay, another question here. Another one asking for clarity. Is it the 22-23 year, which is the first MTD year?
No, it will be the 23-24 year that will be the first MTD year, because it's your counting period starting on or after 6th of April 23. So unless you voluntarily go into the HMRC pilot, 23-24 will be your first year under MTD.
Right. Clarified, Amanda. Do returns have to be on the 5th? Can we use month end to align with software reports? Says Kathleen.
Okay. No. If your accounting period ends on the 5th, so 5th of April, presumably, then that will be broken down into 4 quarters, each ending on 5th, July, October, January, or April. As part of the basis period reform, there is a proposal in there that any date ending between 31st and 5th is treated as the same. In that circumstance, if that goes through, which is looking likely, then it doesn't matter between 31st and 5th, they'll be treated as the 5th.
Okay, so is a no, is the basic answer to
It's
that
a
one.
yes or a no.
It's a yes or a no, just for clarity. Okay. So Philip says, if we have to file by the 5th of August and 3 monthly thereon, are we going to be faced with a big workload for 1 month every quarter? Is there any way we can spread this by changing accounting year ends to 30th of April, 31st of May?
There is, if you go to the HMRC consultation and complain like fury about basis period reform. If basis period reform goes through, then there is very little to do. Everybody will be filing to the same stagger. And yes, for that 1 month end, quarter end, every 3 months, then all your self-employed clients, all your property clients over £10,000, you're going to be making submissions to that same deadline.
I hope that helps, Philip, but I doubt it. Will the quarterly return have to have a profit figure which has a cost of sales and stock movements? I.e., will clients be expected to undertake a stock take at the end of every quarter? None of our clients have cost of sale transactions on a monthly basis.
That is a very good question. I've not seen any official guidance, and that kind of comes into the issue I raised at the very beginning, that it's not clear from HMRC's side what standard of reporting they're expecting on a quarterly basis. To me, I've always treated it as a transactional update every quarter. So I wouldn't, unless I had other reason to do so, I wouldn't be looking at making stock adjustments every quarter to file those updates. But what that will mean, of course, is that those quarterly updates aren't going to be that accurate. But I think in a huge number of cases, those quarterly updates aren't going to be that accurate, which does kind of beg the question why have them in the first place. But I think that's just something we're going to have to wait and see what HMRC's stance is on that. For the time being, I would just be thinking, no, transactional reporting. I'm not going to book a stock take every 3 months.
So they've not said.
They've not said one way or the other.
Right. Okay. Do you think it might happen? That would be.
My suspicion is that perhaps not from the outset, but once we've had a year's worth of data, and if HMRC are seeing that the sum of the 4 quarters is wildly different to the end of year, then they might start to delve into that and try and figure out why that is. And in all likelihood, it's the end of year adjustments and adjustments for stock. And there may put pressure on for people to make those quarterly, but we don't know.
We don't know. Will letting agents be legally required to provide quarterly summaries which include the dates of rental, receipts and expenses? So Heather has problems with letting agents not providing the information in a timely manner.
I don't think they'll be under any legal obligation to provide the information in a timely manner. I mean, getting information from letting agents is always problematic. And when you do get the information, it's not always accurate. I think for clients that use letting agents, I would probably be doing the record keeping independent of that.
What they do.
Yeah, and then anything that comes out in the wash, once those statements do eventually come through, I would be sorting those out in the end of year.
Right.
End of year accounts and return.
Yeah, that's going to be a challenge. Another question about non-resident landlords. Can they claim the personal allowance while submitting self-assessment?
There are a number of reasons why a non-resident landlord could claim personal allowance, and I don't believe any of those will change under MTD for income tax. I always say MTD for income tax, but actually to give it its full title, it's MTD for income tax self-assessment. And aside from these kind of quarterly submissions and the different way that information is being submitted to HMRC, it doesn't fundamentally change the concept of what a self-assessment is. And unless it's specifically legislated for, it doesn't change any of the tax rules that apply to an individual under self-assessment. So as things stand, the same rules would apply as they do today.
So that will remain. So I am conscious of time. We have come up to the full hour. Now, I think given that about 4 people seem to have left since we passed the hour, we will continue to answer questions, and please continue to post them, and we will continue until the room starts to clear, I think.
Should we run the, we've got a third poll, haven't we? Should we run that one?
Let's run that poll now, yes.
Okay.
So, you've got the poll there. The question.
Yep, that is now live.
The question being, yes, what do you, I mean, what you've heard today, what do you see as the most important priorities? So we'd ideally like you to pick your 2 that you have, or the 1 or 2 that you have seen. So educating your client, segmenting your client base, considering what you're going to do internally, looking at the technology, or just getting out of Dodge. I'm really interested to see who wants to just book a one-way flight to somewhere hot.
I think the airlines are going to be quite busy, Andy.
Yeah.
We'll just give that a few more seconds as the votes still come in. Okay, I think we are almost done there.
And how are we looking?
Right, let's take a look. So educating clients on the changes ahead is obviously a clear winner there in terms of what practices should be doing next. Segmenting the client base, that's always a bit Marmite, I find, when I speak to accountants. I think they're probably a little bit sick of hearing about how they should segment their client base. You know, particularly the smaller practices. I mean, I had staff by the time I'd sold my practice, but for many years I was just a sole practitioner, and I knew all my clients intimately and didn't feel the need at in the early days for segmenting the client base. And I suspect a lot of people feel the same, but certainly getting an understanding of who's going to be most at risk in your client base, whether you do some formal segmentation or not, would be important. Yeah, and not many people booking a one-way.
Fewer than I expected, but wherever it is that's hot, I'm sure be busy at some point. But talking about the segmentation of clients, a friend of mine was explaining that he was going to be examining and segmenting based on which of his clients he could get access to that data easily and without them being part of it. And he would make a determination based on a yes or no on that, which clients he would look to keep and foster and which ones he might look to maybe kind of get rid of. So there's interesting ways that you can do that and apply some relatively simple frameworks to do that, I think.
Yeah.
So we will continue with the questions. So we are on. So Bernice is intrigued indeed, to know what HMRC plan to do as a result of the quarterly reporting that MTD requires of landlords and the self-employed.
Well, that's a really interesting one, right? Because they're going to have access to a huge amount of data on a quarterly basis for almost every landlord, almost every business. What are they actually going to do with that information? We've had a number of calls with HMRC discussing that very point. Some of the calls have been quite open in their plans. Others, they've been a little bit more guarded about what they say they're going to do with that data. I don't think there's any doubt that they are going to use that data to identify what they call risks of tax being underpaid. There's just no doubt they're going to use that data in that way. What they have said to us is that they want to be a bit more proactive. So rather than kind of secretly behind the scenes get their data scientists running the numbers to figure out who may or may not have underpaid tax and start opening inquiries, what they are exploring is, can this data give them kind of hints during the year that there may be an issue, and can they surface those hints somehow, either through third-party software suppliers like ourselves or through to clients' personal tax accounts? Can they give some kind of preemptive warning to say, look, our system says there might be a little something in this, you might want to take a closer look. They're certainly exploring that option, which I think is a bit more open than they've been in the past.
Right.
That those flags would just sit within HMRC until there was enough flags that they raise an inquiry. So interesting to see which way that one goes.
Okay, we've got some more questions coming in. There's a lot around this income threshold around property. So just for clarity, we may be going over some of this a couple of times, but are we talking about gross rent or profit?
We're talking about gross rent.
Gross rent, okay. And we've answered this one about self-employment. For partnerships, does the 10K limit apply for the partnership as a whole or for each individual's share?
Well, I've had conflicting responses from HMRC on this one. So when I was in a workshop with them, I asked that very question. They said it applies to the partnership, and if turnover exceeds £10,000, then that compels each partner within the partnership to fall under MTD. I think they gave the opposite response when the Chartered Institute of Taxation posed that in a written question to HMRC, and they responded saying the individual's share of partnership turnover would determine whether that 10,000 is exceeded for that individual. So I'm a little bit none the wiser on that one.
So still more to come.
Yeah, my gut instinct is if the partnership's over 10,000, then the partnership itself will have to report quarterly under MTD, but perhaps each individual partner, whether they report it on their tax return or they're brought into MTD, it's a little unclear. There's lots of questions still outstanding when it comes to partnerships.
Okay, now, so we've got a question here. This is more about I'm fascinated by the subject of about charging clients and what's going to happen to the practice with this. So from one return per year, this is from Anwar, from one return per year to 5 returns per year, how can we as accountants charge clients 5 times more than annual fixed fees? I find it difficult to ask clients to pay for the extra work.
Yeah, I completely understand that sentiment. Again, I think it's probably how you frame it with your clients. I mean, the way I frame it with accountants is, just do try and look at it as if it's a client that's gone from being not VAT registered to being VAT registered. You would ordinarily present different options to that client. The cheapest option for the client would be them doing the VAT themselves. So perhaps you sort out the registration for them, but say if you were not going to pay me to do the actual VAT returns, then you could do it yourself. In all likelihood, there's still going to be an increase in fee because at some point I've got to review that at the end of the year and check that it's okay. At the other end, that might be the point at which the client says, you know what, I've been doing a lot of stuff myself, but now it's just a bit too complicated for me to carry on with, and they'll willingly, begrudgingly pay you to do it. It's a difficult one, but I think you've just got to frame it with the client and explain why there's additional work to be done, and give them options if they're going to do it, because they could do it, right? They could use our software to file the quarterly submissions and not involve you until the year end. which might be what you do today. There will be some kind of checks and balances and things. So I'm sure in any situation there'll be a slight increase, but they don't necessarily have to pay you to support them on it. But you give them the choice, and they go for what they want.
Yeah, I think we're going to have to do a piece about this, and one of our upcoming webinars will be around this kind of strategic approach to making sure that this works for the firm as well as the client, because I can imagine a lot of clients saying, I'm going to go and do it myself, thank you very much. And as I say, coming back some months later.
But also, you shouldn't underestimate how anxious, if you like, certain clients are going to be about this, and will willingly pay you to ensure the wolves don't come to their door. This is a big change. It's a big risk for them. They don't want the hassle. They don't want the headache. And I think we sometimes underestimate how much our clients are willing to pay to have that headache removed. So we shouldn't feel guilty about charging clients appropriately.
Which is an interesting point we were discussing earlier about whether clients, the majority of clients, are going to be hearing about this from their accountant in the first instance, aren't they? That's
one would hope so.
Going to be, it's a wonder whether if they were hearing about it from HMRC and then trying to figure out a solution, that might be better. But probably the bad news is going to be coming from the firms to their clients directly, which makes them be the bad guys.
I mean, that's one way of looking at it, but clients engage an accountant so they don't have to monitor any changes to the rules and regulations, and I think they do understand that change happens, and HMRC do bring in things that cause them problems, whether it's threshold changes or allowances that come and go, and that's part and parcel of engaging the accountant, paying for them to keep on top of it and let them know when there's something relevant to them.
Okay, so we'll do a few more questions, and I think we're going to wrap up. If we can do another 5 or 10 minutes, we'll just get through a few more very quick ones. Richard asks, can one quarterly submission be made covering both income tax and VAT, assuming that they've got coterminous dates?
Wouldn't that be fabulous? Wouldn't that be really sensible?
I think it's a no.
To have a single submission quarterly for the same business for income tax and VAT, because it's essentially the same data. No, not under the existing proposals by HMRC. You'll be making a separate VAT submission from the income tax submission, albeit to the same deadline.
Would the basis you prepare accounts in accruals or cash have any bearing on the figures that you submit in the quarterly return? Is the bare bones bookkeeping information good enough to submit from?
Again, that's something that HMRC haven't clarified. You would think that if, whilst making the quarterly submissions, that is going to be, the end of year is going to be on a cash basis, that you would apply the same logic to the quarterly submission. As things stand, without further guidance, I kind of think good is good enough. If the bookkeeping's on a cash basis, then I would be doing the quarterly on that basis, regardless of what the end of year ends up being. Whether HMRC share that view or not, perhaps they'll give some clarification nearer April 23.
Okay. I want to pick up on this one. I've had a few questions about this. You've mentioned the consultation period. One of our viewers said he's just done a quick Google search but cannot find anything. Do you know, or we can circulate afterwards the details of that consultation?
Yep, best place to look is taxcalc.com, the source of all reliable knowledge.
All reliable knowledge.
Go to the blog, and if it's not the most recent blog, then it's the one prior. So I've written a little article on basis period reform. If you scroll down to the bottom of that article, then there are links to the HMRC consultation itself and the draft legislation, so you can find it all there.
Okay, well, I'm going to do 2 more questions before we wrap up. So first of all, Amanda says, clients who take dividends that are worked out on the final accounts, how's that going to work?
It's not going to work because dividends would be from a company. companies don't come with an MTD until 2026 at the earliest. So the only requirement for filing dividends for an individual under MTD will be as part of the end of year tax return as you have today. There is the option to submit other income sources quarterly if you so choose, but it won't be mandatory for you to do so. So I suspect most people will just file it as part of the end of year tax return as they do today. But companies themselves won't be in MTD for corporation tax until at least 2026.
Okay, and the final question, and I do apologize, we haven't got to all of the questions, but so assuming the basis period changes do come through, is it with basis period? In January 24, we'll need to file all of the quarterly MTD returns and the last SA returns, i.e. in the 22 to 23 year. Is that true? Is that correct?
24, so you will have a quarterly submission to make in January 24, as well as your normal 31st of January tax returns, but your first MTD tax return won't be until 31st of January 25, because it will be for the 23-24 tax year.
I hope that clarifies that question. So we are going to have to wrap up. We have gone way over time. The questions have come in really quite thick and fast. We couldn't get to all of them. We hope to schedule some more of these events, and we may do specialist events around particular topics that we talked about earlier. As I said, we will be sending a copy of this out to everyone who's here and everyone who's registered. But I'm just going to leave it to thank you very much for coming along. Thank you, Dean, and we hope to see you again.